And like not all financial institutions are equal when it comes to investment properties and portfolios. There's a lot of restrictions with lending on how many doors or properties they allow. So if you are talking to professionals who you're being helped with, there's a lot of strategy involved with it.
Welcome to Real Stories in Real Estate with your host, Denise Laframboise. Real people sharing real stories about their adventures in real estate.
Welcome to Real Stories in Real Estate. I'm your host, Nicolee Evans, and today we have George Dube with us sharing about his experience in real estate and real estate investment. Welcome, George. Thank you so much for being here with me today.
Thank you for asking me and looking forward to a quick chat here today.
Yeah, and it is quick. So we've only got 15 minutes and reading through your bio, George, you have so much experience in real estate. How did you kind of start to think about real estate as an option for you for wealth building?
Like most things, it was probably by accident.
Sure.
And it ended up being I'll try to do the real short version of the story, which is hard for me. I like to talk. But I was sick as a dog for a week. And this goes back a couple of years now. And laying on the couch, really dizzy, can't read, yada, yada, yada. And somebody pops up on TV explaining how you were going to be this real estate tycoon if only you took this course. And we've all seen the courses.
Had to be that course, of course. Yeah.
Exactly. Yeah. And so then the following weekend, I'm at my office and I spread out real estate files that I have on my boardroom table, and I made two piles. One pile of those that were making money and one pile of those that were losing money. And then I also, at that point, went over and at the time I bought a few $1,000s worth of real estate books at the local bookstore.
Yep.
And I immersed myself into that. And then I think the good Lord gave me a push because at the time I was sharing office space with another accountant, and both of us were growing at a fairly good clip. We both needed more space. I was subleasing, so it was quite obvious who was leaving at first. Well, he had to leave too because he was growing too fast as well. And that forced me into our first real estate transaction where I was tired of renting and I partnered up with my brother-in-law and sister-in-law. They used part of the property for an apartment, the upper floors. Used the base floor for the accounting firm, had an agreement. Hey, in 2 years, we're booting you out because we'll need the space. About 6 months or 12 months later, I don't recall, we booted him out he was also working with me. Yeah, very, very, very friendly terms. I mean, he's owning half the property too, so this was all good. What we found was that, and we did some rehab work to the property. Yeah. And then you realize, well, if you can do it once, you can do it 2 times. If you can do it 2 times, you can do it 4 times.
Yeah. And that is so true for so many people. Like the first investment property beyond the primary residence is always the one that is the hardest. You know, like it's the same as buying your first like residential property that you live in. Like getting into the market is always the hardest step. The first step is always the one that is going to cause you the most pain. But once you're in, and this is why we always tell clients, just get in if you can. From there, it gets easier and you learn some of the pitfalls and different like challenges. And you're like, I'm not going to make those mistakes again. And after like your consumption of all the information, you're like, oh, okay, I can do this. So how many properties do you have ish now, George?
And I always have to go back to my beautiful bride, Robin, who keeps track of more of these things than I do. But I think we have, let's call it 70-ish doors, I think it is, residential. And then we just sold a few hundred self-storage units. And
I love the casual few hundred of those. But
you can put a fair bit on a property.
Absolutely. And honestly, like 70 is a lot. A lot of people are not going to be able to get there, but the method that you used, the get one and then move on to the next one and retain, is something that people can replicate, perhaps not to the scale that you have, But like after you've had one, what did you do next? Was the next one a mixed use as well, or was it more of a residential, if you can remember? I know I'm pushing you back a few years, George.
It was residential because now I had to return. I just kicked out my brother and sister-in-law, and so then we found, I believe it was a triplex, and then we quickly found. At the time, it was five. It was a small. It was five townhomes, and then
Okay.
we condoed them actually.
Oh, cool. That's an interesting
And
process too.
it is somewhere in there. We had a couple short-term rental. Sorry, um, no, we weren't doing short-term rentals at the time. We did a couple rent to own. Sorry, that's what I was looking for.
Okay, yeah.
And somewhere in that, as I said, I had to make sure my brother-in-law and sister-in-law were
But someone
had a place to go.
you kicked them
Uh,
out. You couldn't leave them homeless. So again, I love that
exactly.
you had issues and you found solutions for them. But
Right.
one thing that you said there that like the clarification around is the number of doors you have. So one thing to note is how many doors you have doesn't necessarily mean you have 70 standalone properties. Some of
Correct.
them have multiple units. And that's something that we often encourage investors to get into because if you have multiple doors and multiple units in a property, you have more assurance that you're going to be making income from that property. It is much harder, in our experience, and I wonder if yours is the same, to purchase a rental or investment property that is a single family home. Those are trickier. Even though it sounds more simple, you're like thinking less tenants. The safety in numbers, I guess, numbers of doors is really there. Is that what kind of attracted you to the multi-door properties as well?
It was easier to finance, easier in the sense of if you're replacing a roof, obviously it's amortized over a few units as compared to one.
Yeah.
The yeah, I think it may have been my first year or two of investing that I had some single families. I don't think I've acquired them since.
Yeah.
It was just easier to get the I know it sounds odd for particularly when somebody's starting off, right? Like, what do you mean it's easier to get a fiveplex as compared to a single family? That doesn't even register,
Yeah.
but it is.
Yeah, it absolutely is. And George, for your properties, do you manage them all yourself or do you use a property manager for most of them?
Oh, definitely a property manager. The That was one of the lessons early in life
Yep.
where Robin and I had a period, I don't know, 6-ish months or so, and we were managing properties and realized we were not very good at it. We didn't enjoy it.
Yep.
We sucked at it. We hated it. We didn't enjoy it. Did I mention that? All these things kept pointing to the obvious of why are we doing this?
Yeah.
It's
And
not our skill set.
honestly, like this is another lesson that I think that people who get into this line of wealth growth realize fairly early on, like this is not where you're going to be cutting corners. Like, I understand that perhaps the expense of a property manager isn't something that you originally thought, but you should have. Like, when you're
Should have.
budgeting, you definitely should budget in for property management, especially like if you're purchasing something that's not super close to home. And the reality is, oftentimes the opportunities are a little bit further away, especially for these multi-res properties. They're probably not where you live. And that's something else that we see people that they say, oh, well, I just want to purchase the next town over because then I can go visit it. You don't want to go visit your properties. Like,
I, Robin and I had a property literally located across an alleyway from our first office, actually, first property.
yeah,
And we, again, just we wanted the property managers there. I could have easily gone over there. It wasn't like I couldn't do it, just
yeah.
not my skill set.
Yeah.
I was going to hate doing it, so why bother?
Exactly. I think that as business owners, that is absolutely something you learn early on, even in business, is that you hire for the things you don't want to do.
Yes.
In terms of any other tips for people like who are thinking, hey, this sounds cool, like, yeah, let's grab a multi-unit residence. And is there any other tips and things that you learned either like at the beginning or as you've gone along that you could share that and maybe it's mistakes you made. They're like, don't do this.
Well, I have a
Is
list of those, but
oh, awesome.
and not that we should be going through all of them. It'll be
No.
embarrassing, but I think more of it is people are not likely, particularly when they're starting off, focused on where they want to be as compared to where they are.
Yeah.
And so they're not getting ready for that. And from like a tax accounting perspective, if you will, that means, do we have the right structure into place? Like, do we have a corporation?
Mhm.
Should we have a family trust? And maybe the family trust is not today. Maybe that's 5-ish years from now or something to that effect. But having a plan to get there, and maybe none of that's also
Yeah.
appropriate.
Hmm.
In terms of a bookkeeping system, people will kind of try and start off doing whatever it is they're using. And one of my points to them is to say, do you think it's a lot easier to learn how to use your bookkeeping system when you have 2 properties or 10 or 20 properties? Like trying to convert and all of a sudden unravel the shoe boxes, Excel spreadsheets, whatever it is, when you have 10 properties is a very different process, if you will.
Bigger mountain at that point in time.
It is so much easier to get used to the processes and whatnot when there's a couple of properties, and very, very easy to mentally understand or get closer to understanding what's
Yes.
going on with the properties and tracking those.
Hmm.
So again, the big lesson I think is just trying to ensure you're building for literally what you're going to be within reason.
Yeah.
Have it so, I mean, you don't have to start off with the Taj Mahal of structures and business ideas and things of that nature, but you want to get there, assuming
Absolutely.
that's the goal.
Yeah, and that's I think that the step one is to have clarity and work with people like yourself and like us who understand both the starting steps and also the building, because like you don't want to set yourself up to be limited. You want to set yourself up to be unlimited.
Mhm.
And it may, you're absolutely right. Like a family trust to some people, like off the hop, is not going to be the right
Right.
thing. You may not, you probably
It's
don't have the
inappropriate
assets.
in most
And it's,
cases.
yeah, and like even setting up the holding company piece, you have to make sure you understand what that looks like and work with a really qualified accountant who has done this before. Like at the end of the day, starting out, you haven't done this. You haven't, like, but there are so many people that have. So having the right people in your corner is so important, because if you're set up for growth, you will grow. If you're not set up for it, it's going to be a struggle. And we don't like struggles. Let's keep it easy.
It's going to
Yeah.
cost more too, in terms of like somebody going out, if they are reasonably confident they should be in a corporate structure 3 to 5 years from now, for example,
Hmm.
but they start off owning properties personally. And I get why that might be easier initially.
Yeah,
But there's a lot of cost involved in transferring those properties afterwards.
absolutely.
So why not start where we're supposed to be? Maybe we're underutilizing the corporation for a couple of years, but it was
Mhm.
still cheaper in most cases. Again, making some assumptions
Yeah,
as compared to the alternative. And depending on what province we're investing in,
yeah.
for example, in a lot of provinces, if you enjoyed paying the land transfer tax the first time, you're not going to like it a lot more the second time. So why go through? And I appreciate that that's not applicable for every province.
Yeah.
Um, but certainly the accounting fees, the legal fees, the transfer costs, things of that nature, that they start to snowball. Oh, wait a minute. And then
Yeah.
you'll be the person being able to advise with respect to the financial institution may have had something to say about suddenly transferring properties around.
Absolutely, they will. And like, not all financial institutions are equal when it comes to investment properties and portfolios. There's a lot of restrictions with lending on how many doors or properties they allow. So, if you are talking to professionals who you're being helped with, there's a lot of strategy involved with it. Because if your goal is to own like George level number of properties, how you would do that isn't necessarily the same. It's not at all the same as someone who's like, I'm going to max out at 5 properties, and that's fine. Like,
Yeah,
even if you think that you're only going to have 5 properties, and you like change your mind later down the road, that's fine too. But like having those conversations with professionals who know the nuances of different programs and different lenders and different accounting structures is so important, because again, you don't want to be paying for things. Like, it might be nice, you feel like you're deferring some payments, but at the end of the day, you're going to end up paying more.
you do.
And I know for us, because this is an area that we specialize in, we often have clients, especially people who are self-employed, who say, oh my goodness, my accountant's really fantastic. They have ensured that I haven't paid enough taxes. And we're like, amazing. But I can't purchase a property. And that's actually untrue at this point in time for self-employed people. Maybe you're not going to be able to wander into your bank branch, but that's probably not the best fit anyhow as a self-employed person who's looking to acquire and build this wealth through real estate to walk into the bank, because they also want you to invest your money there, not have it out in working for yourself in real estate, because that's not how they make the most money. With your properties, George, are they all with one lender, or have you diversified, or are you mortgage free?
I was going to say the majority are with one, but
Yeah.
a good chunk are with one.
Mhm.
But as well, I do work with other individuals in terms of partnering with them on properties, and so
Yeah.
one of the some of the small apartment buildings are with a couple different
Yeah.
institutions, and then my kind of I haven't talked about limited partnerships and other
You've
secondary
got
real
all
estate
the
investing.
structures. You've got all the
Yes,
options and all the
there'll be a
structures.
host of things, but
Yep.
I do like the concept of trying to do a fair bit of work with one of the institutions in the sense of developing the relationships, etc.
Absolutely. Yeah.
And that way, although this has burned me before, but by and large, I think in developing those relationships with a couple of the individuals at the institution,
Mhm.
I think that helps where I could use a little bit more leverage on this deal, or I'd like a little bit
Absolutely.
of here, and then to now today, and I'm sure you can speak much more to it than I can, but I don't think that the real estate industry is as enamored by the banks as it was, say, 3 years ago or so. And
Yeah.
so I need a little bit of extra push sometimes. Whereas if I'm just walking in off the street,
Mhm.
I don't think that I get that.
Yeah. And at the end of the day, real estate investing, all manners of wealth growth is about relationship building. Like a lender, like it's like people that like you've talked about limited partnerships, holding companies, owning multiple doors, rent to own. Another one that we often see is flipping properties, people who have them for a short amount of time and fix them up. Specifically for that kind of thing, you definitely want to develop a relationship with a lender, because then they get to know you, and it can lead to either quicker approvals, sometimes lower rates, because they know what you're doing now. And building that relationship with the people, whether it's a financial institution, a real estate agent, your accountant, is so important to the growth and the ease of getting things done. So like I would agree, like having relationships, especially if you're like, I need a little bit more money, please, is always good, because they know you. And it's looking at very, very different strategies.
And I think too, the idea or the concept of, again, I try and have a very good relationship with a handful of the professionals.
Mhm.
And so I needed some help earlier this week, as an example, on the legal side.
Yep.
And I text my lawyer, and I get a reply back in like a couple of minutes as compared to if I would have sent the email. And they're a fantastic team.
Yeah.
I'm not suggesting otherwise, but the level of priority is a little different at times where I can have a quick blurb to say, I really need you, I think. I don't need a lot of your time, but I need
Yeah.
10, 15 minutes of your undivided attention.
Yeah.
And so and I do have clients the same way. I'm sure you do too,
Of
where
course.
you want to be able to help them. They've been working with you for a period of time, as compared to, not that we're not trying to help everyone, but somebody that's relatively new or they're always complaining about something or another. I'm going to get back to you, but that
Yeah.
level of getting back to is going to be very, very different
Yeah.
than, and somebody has been I've had a great relationship with for a number of years.
Yeah. And that's the truth of the world. Let's be honest. Like anyone you know well, and you've built that trust, like what is it? The know like trust relationship continuum, then you are going to have better experiences with that. So George, for you as an accountant, and we haven't actually talked about your actual business yet, more just your experiences. If you have clients that are like when should they come to you if they're thinking, hey, you know what? George is fantastic. Like I need to talk to this guy. He knows what he's doing. When is the best time for them to kind of approach you about these developing these structures and putting these different things in place? Like obviously right away, but like is there any ideal time for them to reach out? Like
Really, we like the idea of people coming to us before they've purchased their first property, if possible. It's so much easier to build the right structure as compared to change what's going on or fix what's happened and then morph into whatever it is that we think is going to be the ultimate.
yeah,
Now, it's not like we don't regularly talk with people that have already started off or done this or that.
yeah.
And it's rare that it's a disaster. I'm not suggesting that, but it certainly can be less costly in
Mhm.
terms of doing the changing when we start off initially. And sometimes, quite honestly, the conversation is going to be relatively quick in a sense of, you know, I really don't think you need anything fancy here. Like, so, for example, somebody coming in and they're going to buy one or two small properties and I would say, in a lot of cases, absent other information, I mean, congratulations, that's better than the vast majority of people, but you really don't need
Absolutely.
my help.
Yeah.
Um, you can go someplace else and get some of those services. You're going to be great. And congratulations again, truly.
But absolutely. Yeah.
Where somebody may be starting off, they don't have anything, but they have the capability, the dreams, etc., that they want to grow. So it's not that we're demanding somebody has this magnificent portfolio to start with,
Yeah.
but we try and be as brutally honest and nice as we can. And if we can't help,
Same.
whether that's because of match, like sometimes there's just not a personality match, right? And,
Absolutely.
and
At the end of the day, there are a lot of options out there for all services, all relationships, and it is important that you're working with someone that has the expertise you need, but also has the personality that you need, because different people, different investors need different personalities. Either it's the push, or the advisor, which you are very good at doing the advising part, and sometimes they just need something different and like that's okay, not everyone works for everyone. Yeah.
yeah, I'm more than I say. I mean, I'm at a level I don't need every little bit of business. I
Yeah.
love every bit of business usually,
Exactly.
um,
All the
but
business please. Yeah.
exactly. But I also want to make sure that that person's taken care of
Uh,
legitimately. I
mhm.
may not always be the right case. I think in many cases I am, or my team. Don't get me
Yeah.
wrong, but it's not like it's always the best fit.
Absolutely. So, George, we've only got a couple of minutes left here, but can you tell us a little bit about your business and like we've covered it in a roundabout way, but what is the name of your business and how can people find you?
So I'm a partner at BDO. And so my focus in the practice, as you can probably tell, is obviously real estate,
Guessing, yeah.
with a heavy tax background to that. And we're essentially trying to help people one, build their portfolio. Some people they have the portfolio they want and they're just looking simply to maintain. A lot of times they're looking to transition. We love the idea of helping with retirement, estate planning,
Yes.
mentoring the next generation,
Yeah.
looking at alternative investing. And that goes for I work with a lot of healthcare professionals.
Yeah.
And so they've got fantastic jobs. Or alternatively working for themselves, but we also see where they need some help on and not that I'm not an investment advisor, but um, we can certainly help monitor what's going on from that after tax perspective.
Yeah.
Provide some. I think where people come to us is, as you indicated before. I mean, there's maybe not a lot, but there's certainly I'm not the only real estate accountant out there by any means, but what I think people keep coming back to us for in terms of that is that ability to, yes, we're going to marry the book smarts with the practical.
Yeah.
And not that we don't have things I'm learning every day, but Why not
We
learn from
like
my
if we stopped
mistakes?
learning, like I think we like you have to keep learning every single day of your life, and you know, recognizing areas that you need like any kind of augmentation of your knowledge is something that is gratifying. Like you don't want to be stagnant. Like
Oh,
always learning, always updating is so wonderful. And I think that that's also part of your business proposition in educating your clients as it is for us. So it's been so wonderful talking to you today, George.
thank you.
George, what's your like? Do you prefer email, phone calls, website? What do you
Email
prefer?
tends to work a lot better. I'm often in meetings and whatnot, so the phone calls are more challenging for me to deal with.
Okay.
But in terms of email, my BDO address is gdube, D-U-B-E, at bdo.ca. Or a lot of people like to see some of our more of our real estate oriented information,
Mm-hmm.
which is at the georgeedube.com site.
Mm-hmm.
And again, a separate email there. But from kind of the accounting tax side, I like to flow everything through the BDO side, if you will.
Yeah. Yeah. Awesome. Thank you so much for
Thank
being here
you.
with me today, George. That was so informative. And I really appreciate you talking about your experience as real estate and giving us some tips on what to
Thank
do
you.
and what not to do. So
Very,
thank you
very
so
welcome.
much. So
Thank you.
thank you for tuning into Real Stories in Real Estate podcast. You can check out this and other episodes on our website, laframboisemortgage.ca, or anywhere you consume your podcasts like Spotify, Apple, or iHeartRadio. Thank you so much for checking us out today.